Shares of Ford slamming on the brakes today, falling more than 3% after profits shifted lower last quarter, and the automaker warned of a leaner year ahead. Our Philip has more.
An interesting day for investors in the Ford Motor Company as shares of the automaker were under pressure after the company reported first quarter earnings that fell shy of estimates by 6 cents. Now, there were a number of one-time charges that brought the earnings down by about $900 million. What Wall Street was focusing on was the underlying core business from Ford, and there's a mixed review there. Some are looking at the overall run rate in terms of the auto business over the next 3 quarters, and they're pretty optimistic about where Ford stands. But it's the mix, in other words, how many trucks versus cars that Ford was selling in the first quarter that got a little bit of attention. That mix was negative, and it has a few analysts wondering if Ford can reverse that by the end of this year. The CFO of Ford says that definitely will be happening.
We did have negative mix in the quarter that was around series mix and options and related to the products that were going to be running out as we move towards new models. For the full year, we think that will be fully offset by favorable product mix, so the types of products that we sell. So I think for the full year, that won't be an issue.
On the Ford earnings call, there were a number of questions from analysts and reporters about how long CEO Alan Mulally plans to stay at the automaker. Mulally repeatedly said that there's no change in his plans, although we should point out that there have been a number of reports that the board of Ford Motor Company is going to announce a succession plan within the next 30 days, and that Mulally will be leaving Ford by the end of the year. That's the story from here at the New York Stock Exchange. Phil LeBeau for Nightly Business Report.